Hello traders everywhere, Adam Hewison here, co-founder of Market Club with your 1 p.m. market update for Thursday the 20th of October. Can Europe ever make up its mind? The continued back and forth squabbling that is going on in Europe continues to be a real problem for the markets here in the States. The risk on, risk off trade is becoming a daily ritual for many traders. We of course want to refer to our long-term trade triangles that continue to keep us on the right side of the market. If you didn't have a chance to watch our Market Club TV show last night, you may want to take some time and look at what we were saying and what the markets are doing today. We want to be very watchful of the S&P 500 index, as a move and close below the 1200 level should be viewed as topping action for this index. It is all going to come down to tomorrow and how we close in the markets. I believe that the politicians in Europe are really no different from the politicians on this side of the pond. What I mean by that is they do not want to make a decision that can cost them their job. We have said from the beginning that we thought Europe was a disaster, as you have many different sovereignties pulled together in an unholy alliance called the euro. Every country in Europe is going to hunker down eventually in their own sovereignty. Greece is going to default and probably fall into chaos. It is unavoidable at this stage of the game. Let's hope things remain a little calmer here in the United States. Now let's go to the 6 major markets we track every day and see how we can create and maintain your wealth in 2011. But first, I want to introduce you to one-on-one market personal coaching. Have you ever considered having a personal coach to help you with your trading? If you'd like to know more, it's a free phone call, no obligation. Just call us 1-877-219-1482. That's 1-877-219-1482. Now let's go to the markets. And here it is. You can see a lot of red on the board, the Dow, the NASDAQ, the S&P, gold, all down, the dollar up, which is the way we want markets to go. So let's go to the portfolio manager, and here we are. The first market we're looking at is the S&P 500. Now this is the key level. Again, if we close under the 1200 level right here, and let me just give you a little illustration about what could be happening there. If we close down, we see if we just extend this red bar down, and we close down here, that's going to be very, very negative, indicating a move back down to the 1230 level, which is a 61.8% Fibonacci retracement. As I say, the market it looks like it's rolling over, just like it rolled over here and rolled over here. Again, this is not a particularly positive chart in my mind. The only thing that would make it positive is if we were to see this market go up here and close really well, let's say above 1250, above 1260. That would be a very positive indicator. All of our triangles are mixed. Our monthly is negative, and our weekly and daily are somewhat mixed, indicating a plus 60, a trading range. So it's very possible we could see the market come down to these lower levels, and I would expect that to happen. It's going to hinge on where we close today and on Friday. But generally speaking, it closed below 1200. We're 1201, 1202 right now. Very close to those levels. We've gone below 1200, but no close there. Close below that level. I think it's going to be a negative sign for this index. I still think there's still a lot of garbage to move along, and we are still looking cyclically for the equity markets to make their lows, their equity markets to make their lows in October of 2012. So let's see what happens. Let's take everything off the screen, go to our next market, and we've been right on the money with this one, of course, and that's going to be silver. And the silver market has come under pressure today. We're trading down close to the $30 range. We've had the parabolic just kick in. This market is not looking good. We said that potentially this market could go to the $20 an ounce level, which is a shocker for most people. But the market has come, it's just rapidly going down. If you look at the similarities here, I think they're quite good. You see the market move down here, sort of moved along, and let me just put this in my telestrator, but sort of it moved down, sort of moved along like this, and eventually, boom. I think we're doing a similar type pattern. We're going to go along, and boom, we're going to go down and see a big push down on this market to the downside. So let me just clear this off the screen because I want to show you something else on silver that we're looking at, which I think is pretty interesting. Now, one of the things we like to do, well, at least I'd like to do as a trader, I like to look at the different markets. I like to, with different charts. So I like the candlestick charts. I think they're fantastic. But I like to see a close-only chart. And you can see the close, the lowest close we've had in silver is right here. And that close was 29.06. So $29 is going to be a very key level for this market. If it closes below $29, then we're going to see some fireworks to the downside. We're not really in an oversold condition yet. You can see right here, we had the sort of rollover from there. We're not in a position like we were back here or even back here. So we have really some maybe room to go on the downside. And again, all of our trade triangles, if you look at our trade triangles, which I'll move over here, they're all negative. Monthly, weekly, and daily, minus 100, strong downtrend. Looks to me like we're going to see further erosion in the silver market. There's still people who are long silver, and I think those folks are going to lose. So let's go to our next market. And the next market we're looking at is gold, and this is very, very interesting. Unlike silver, we have a 55 reading. However, what's interesting, if you look at the gold market, and let me just take the Donchian trade channels, I'll put them back on, but I want to take this off, make it very clean for everyone. So if you look at this market now, this is the gold market. We had the big rollover, the double top and the rollover, which we talked about before. Here's the double top, the pivot point, the market rolled over. And now what we're doing, this is a very key level here, $1,618.80. We're below that level now. If we close here, this is going to be a new low close for the move. And we have to go all the way back. Let's just see. Well, we have to go somewhere back to July 22nd to get a similar price. So again, this is a very, very important level. If we close down here, it's going to look very, very much on the defensive. I think it's a part of it is just the general malaise, the general negativity in the marketplace, not just for this, but also for pretty much all the markets. And if we go further out, you can see if we take out this level, we could go back to the $1,500 level. I mean, it's very, very possible. It's not to say it will happen, but certainly you want to pay close attention to these markets because they could be very, very simply, we could see some other areas of interest. But generally speaking, if we close below this previous low, which was, as I said, I think it was 618 or something like that, 618.80, then I think this is going to present more weekend pressure on the market. So let's take a look at our next market. And the next market we're looking at is going to be crude oil. And crude oil, again, this is the market, you know, we talked about, and this is why close-only charts are pretty valuable to a trader. And I'll show you this, what we're looking at. So here's, obviously, here's a high, boom. So we boom down, down, boom, down, boom, whoop, down. And now we're sort of rolling over again. So every time we've had a rollover, we're rolling over from a lower high, lower high, lower high, lower high, and the corresponding lower low, lower low, lower low, lower low. So again, I would look for this market to come back and test possibly the $80 a barrel level. It's 84.72 in the December contract. We have a minus 55. The monthly is negative, the daily is negative, and the weekly is the only one that's positive. However, that could change. But generally speaking, you have a trading range indicating you could definitely see this market be on the defensive and pull back. So let's clear the screen, and we can do that very simply with MarketClub. And then we go to our candlestick charts, and I want to go to a very simple, like a 3-month chart. And you can see right here, the action yesterday was what we consider a negative engulfing line. We consider the entire engulf the previous blue line. If we close down here, confirms that this is a top. And if we just simply take that off and go to our very simple Williams percent R, take the highs, drag that down to the lows, and you can see 80.15 is a 61.8% pullback. I think it's a very good chance we'll get there, and we may even exceed that. But generally speaking, I think this market's going to be a little bit negative for the next several days, particularly where we close for the week. And this is the other thing you want to start looking at on a Thursday. And let me just clear the screen off again here. And let's take the Fibonacci off, and let's go to a weekly chart. And it's so simple to do with MarketClub. And yeah, if we close down here for the week, it means to me you've got a dark cloud cover indicating that this is a top. Obviously, we talked about the 90 level being a very major resistance level. So I think potentially we could be rolling over, have another negative week, and we could see this market get a little bit more defensive down to the 80 level, particularly if we see the weakness in the equity markets. The equity markets have basically been pulling the strings for the crude oil market. When the crude oil goes, when the equity markets go up, crude oil goes up, and vice versa. So let's go back to a simply daily chart, and actually let's take a look at a monthly chart. Well, actually we're higher for the month, but that doesn't mean to say the month's over yet. So let's go to a daily chart and go to our next market. The next market we're looking at is the dollar index, and again, this is a 55 reading. I'm going to put our Donchian trade channels, and we talked about the Donchian trade channels, also a parabolic stop and reverse. And you can see we have reached the bottom level of the Donchian trade channels. Also, we are in an oversold. We were in an oversold. We're sort of beginning to cruise out of that. And on the on the MACD, I don't know if you can see this, but it's beginning to just flatten out and possibly turn around. So I think the opportunity here, as we said, if we see this market close over 77.5, it's currently trading. We're currently trading around 77.30 right now. So if we close over 77.5, I think there's a good chance we'll see this market test the 78.50 level and possibly even higher. But it looks to me that we've had a pretty good move up, which we talked about, and the move up was to just shy of 80. So this is the move up. We've had a pullback, and I think this is around a 50% pullback from here to here. This is I think it's 50%. I'm just looking at what my memory serves me correctly. So it's a pullback in a bull market, and I think we're going to see another leg up here, because I think the U.S. is going to be the only place, the only game in town to have your money right at the moment. So let's see how that plays out. But generally speaking, over 77.5 on the dollar index, I think it indicates good upside action for the dollar index. So let's clear that off the screen. Go to our next market. The next market we're looking at is going to be the CRB index. Remember we talked about this, and we talked how this is a very important level, this 316, 317 level. The market basically topped out there. It's pulling back. We could see a move back to the 300 level, and simply put, you just get the Fibonacci tool. You're using this a lot in your trading. It's very, very useful. 302.03, so another 4 big points here. We can see this come down for handle, and I think this will be an interesting level around the 300 level. But generally speaking, it would say that inflation is not here yet, or not available, and we could see just a further sort of sideways action. But generally speaking, if you look at this market, let's scope this out just a little bit further, and you can see it really hasn't. And by the way, this is a 61.8% retracement. Let me just take that out of the way and go into a simple line chart. And I'll take this off the screen, make it simpler for us, and take that off there, and close that up and go here. And as we said before, this is a simple Fibonacci retracement down to the lows. I think the lows were back here, so you can see it just got there, and it's bounced up now. The weather, but if you look at the longer term picture in this, and that is, you're just seeing, if I can step this out really quickly for you, is you're seeing, you see the pattern here, lower lows, lower highs, lower lows, lower highs. Now eventually that's going to turn around, but it hasn't turned around yet. And it would seem to me that we're going to see more of a defensive action, possibly down to this 300 level again. and maybe see some sideways action from there. But right now, it looks like all the markets are on the defensive mode, and we can see how that works out eventually. But hey, this is Adam Hewison. I really appreciate you looking at what we're doing. And if I clear the screen here, I want you to consider really a one-on-one Market Club personal coaching. I think it's going to be a big help to you, and certainly the kind of markets we're trading in right now, you cannot get enough help in terms of really getting that edge that you need to be successful. These are not buy and hold markets. These are not your daddy's buy and hold markets anymore. These are markets you have to be aware of, because they can take you under. If we're right and we do get the kind of move we're looking at, it could be a tremendous shift in terms of your finances. You could possibly make a lot of money, or if you're not aware, you could lose a lot of money. So Adam Hewison for Market Club. I'll be back at 1 o'clock tomorrow, so stay tuned. So let's see how these markets trade for today. Watch the 1200 level and the S&P 500, and also let's see what happens later today in all of these markets. I'm Adam Hewison for Market Club. Have a great trading day.